Hey everyone! Today, we're diving into some big news from across the pond. The European Central Bank, or ECB, has just cut its benchmark interest rate by 0.25%, bringing it down to 2.75%. Now, you might be wondering, why should you care about this rate cut? Well, let's break it down. First off, the ECB's decision to cut rates comes as no surprise. This is actually the fifth rate cut since June 2024. The main reason behind this move is to tackle sluggish economic growth in the Eurozone. Even though inflation is nearing the ECB's 2% target, they believe disinflation is well on track and have welcomed the slower wage growth. But what does this mean for the European economy? Well, the Eurozone economy has been struggling lately. In the last quarter of 2024, major economies like Germany, France, and Italy either contracted or stagnated. Spain was the only bright spot with positive growth. So this rate cut is an attempt to stimulate economic activity and hopefully get things moving again. Interestingly, while the ECB is cutting rates, the US Federal Reserve has decided to keep its rates unchanged. Under the new US administration, led by President Trump, there was a lot of fear about potential trade tariffs. Thankfully, those fears haven't materialized into blanket tariffs, but the threat still lingers. This global uncertainty adds another layer of complexity to the ECB's decisions. Now, let's talk about inflation. In December 2024, inflation hit 2.4%, but it's expected to ease back towards the 2% target. Factors like moderating wage growth, a softening labor market, dropping oil prices, and a stable dollar are all contributing to this cooling down. Another interesting point is that the ECB's deposit rate of 2.75% is now approaching what's considered the neutral range, which is between 1.75% and 2.5%. If the ECB continues to cut rates, we could see them dip below this neutral range, which might stimulate even more growth. However, there are still challenges and uncertainties ahead. President Trump's policies and the potential for trade tariffs create a volatile environment. If the EU retaliates with its own measures, we could see inflation spike again. Additionally, weak consumer confidence, shrinking industrial output, limited government spending, and slow export growth are all hurdles that the Eurozone needs to overcome. So to sum it up, the ECB's rate cut is a significant move aimed at boosting a struggling Eurozone economy. Whether it will be enough to overcome the various challenges remains to be seen. But one thing is for sure, the economic landscape is changing, and it's something we all should keep an eye on. Thanks for watching. If you found this video helpful, make sure to hit that like button, subscribe, and leave a comment below with your thoughts on the ECB's latest move. Until next time, stay informed.